The cryptocurrency market has experienced a brutal correction, resulting in over $500 million in liquidations in the past 24 hours alone. Will this correction develop into a high timeframe downtrend, or is it nothing more than a healthy setback? How are the short-term charts looking, and what does the macro charts indicate about this move? Let's go ahead and jump into the charts. Okay guys, welcome back to the channel. Thank you for tuning in. I hope you're all having a fantastic day today. In today's video, we're going to be discussing the recent correction for Bitcoin. What does it mean for the short-term price action? Will Bitcoin continue toward the downside and develop a high time frame downtrend? What are the next likely moves for Bitcoin? Was this correction a healthy correction? And of course, what the macro charts tell us about this correction and potential future corrections. Before we do get into it, smash that like button, hit that comment button, and subscribe to the channel. We post daily videos on Bitcoin focusing on the facts, the data, the technical and the structural information. No hype, no BS, no emotion, pure raw TA. If that is the kind of content you're interested in, joining us on Telegram. It is the third link down below. You'll get access to charts, updates, videos, educational posts, news events, and everything you need to stay in the loop of cryptocurrency with Bitcoin and the relevant economic news. If you're interested in joining our VIP channel, you'll get access to trading setups with exact entries, exact targets, exact stop losses, trade justification, and exclusive analysis. You'll also get access to our group chats, our general chat, our trading chart and education chat, our help chat, our trade setup chat, our news chat, and our daily video chat. If you're interested in joining over 600 members, contact me in the pinned comment of the free channel for more information. Let's go ahead, guys, and dive right into the video. So starting off really quickly on the recent 24 hours of price action, before we jump into the rest of the video, we can see Bitcoin has seen a brutal 8% correction from that 44,000 mark all the way down to around $40,200. And this happened in a very short period of time. Within about a 2-hour candle, we saw this brutal correction play out. And if you've been watching and following our videos, we were discussing the potential correction loading a few days ago. We told you about this 10-day long uptrend, and we said if we lose this 10-day long uptrend, an hourly candle below would justify that, which we saw over here. That would validate a potential short signal to 42,000, and if 42,000 was lost, we would see a correction down to 40k, and that is exactly what we have seen. Did it happen? Yes. Did it happen way quicker than everyone expected? Absolutely, guys. We did see this coming, but it happened so quick and it happened way faster than everyone expected, so it was still very shocking to see. But in today's video, like we said, we're going to be discussing not only what does this mean for Bitcoin on that short-term chart, what does it mean for Bitcoin on this macro chart, but we'll also be taking a look at exactly what we would expect Bitcoin to do from here and why we shouldn't be too worried about this move as of right now. So before we do get into that, guys, let's jump into the market data. So as we can see, brutal day for Bitcoin and cryptocurrency. Liquidations are up 511%. This is sitting at a total of $517 million in total liquidations. Probably the largest total liquidation day we have seen for Bitcoin for months. I'm talking since at least September, we have not seen liquidations over 500 million. Insane stuff. Looking at total 24-hour volume, we are up 164%, sitting at a total of 180 million. Overall volatility index has not adjusted to its recent move. It is on a 30 and a 60-day period, so we haven't seen any changes as of right now in the volatility index. However, with such a brutal move, we would expect the volatility index to move toward the upside. Moving over to the DXY is still finding temporary support at our 103 level. Again, for the DXY to flip bullish, we need to break above this diagonal orange trend line. If we break above the diagonal orange trend line, we will be entering a overall uptrend. The uptrend target is going to be the 108 level. Of course, this move would be very bearish for traditional markets and bearish for cryptocurrency. However, a loss of this base of support will result in a continuation downwards to the 101 level on a higher time frame, and that would be very bullish. Now, we do have some very important economic releases coming out in the next 24 hours. Well, let's go ahead and quickly bring these up. We have got, of course, our CPI data, which is coming out today in actually around 12 hours. And then we have our PPI data tomorrow. And most importantly, we have the interest rate decision the following day. And the interest rate decision is going to be absolutely significant in determining the overall direction of cryptocurrency and likely the stock market for the next few weeks. So we do see a significant change. For example, they hike those interest rates. We could see some selling pressure move into the markets. If we do see them pause the interest rates, we'll likely see the overall trajectory continue as is, mostly fueled by the ETF news. And of course, if we do see a reduction going into the negatives, again, dropping those interest rates, that is going to be absolutely bullish, adding fuel to the flames, pushing the markets even higher. So definitely something you want to be paying attention to and not something you want to be sleeping on. Moving over to those traditional markets, looking at the S&P, we are still looking very strong. While we remain above this downtrending diagonal resistance right over here, we are definitely looking strong and looking for a continuation to these all-time highs around 4,800. I would be expecting the all-time high to be reached only when and only if we lose this diagonal trend line. That is when I'd expect the short term to flip bearish again and the price action to continue downwards. For now, very bullish. Looking at the Dow Jones, we are actually coming up to retest the all-time high. And a lot of people are seeing this right now, but we're coming up to retest the all-time high we made back in January 2022. Of course, this area is an area of resistance. A break above this level will result in an all-time high breach and the macro continuation upwards. Again, the interest rate decision, inflation data is going to play a massive role in what happens next for these markets. So definitely pay attention to that and be aware of any potential changes in those markets and releases based on that data. Let's go ahead, guys, and jump over to Bitcoin because we have so much to talk about today. But before we do, a quick word from BitGet and BingX. I wanted to briefly interrupt today's video to discuss the two exchanges we use on this channel, BitGet and BingX. So which exchange should you sign up to? If you look to the right hand side of the screen, you're going to see the list of differences in relation to KYC requirements and the countries these exchanges offer services to. The first link down below being the BitGet link and the second link down below being the BingX link. No matter which link you sign up to, you're going to get up to 15% discounts on your trading fees, up to $5,000 in trading rewards, and of course, you'll get access to every single MegaWow exclusive bonus campaign we run on these exchanges. Alongside that, BitGet and BingX are incredibly similar. They are both ranked top 10 in terms of trading volume. They both have extensive liquidity pools and market pairs offering up to 125x leverage. And most importantly, they both offer protection funds for their users to protect you against any third-party hacks. So get started now and support the channel by clicking the links below. Thanks for listening. Okay, let's get into Bitcoin, guys. And as we said, we're going to be discussing this correction. What does it mean for Bitcoin on the short term? What does it mean for Bitcoin on this macro chart? Could we see the price action develop a high time frame downtrend? How are the macro charts? We're talking the monthly charts, telling us to be prepared for these corrections. What does it mean going forward? And of course, what are the next likely moves? So let's go ahead and start on the overall higher timeframes, the macro chart, specifically discussing context surrounding the probabilities of corrections and why we should not be too worried about them as of right now, and also why we shouldn't expect the price action to permanently go up forever, why corrections can be healthy, and how corrections sometimes can actually be beneficial for the overall trajectory of the price action. After we discuss that and talk to you about the potential upcoming corrections, then we can discuss the current correction, what it means, and why it's significant. So if we take a look at our 4-year cycle chart right over here, we can see something very, very, very interesting. And that is every single time we retest that dotted trend line, we do see a strong correction for Bitcoin before we break above and continue into a macro uptrend. And that, of course, being the overall bull market. In this particular instance, we have yet retested that dotted trend line. However, if history repeats itself, we should be expecting a large correction for Bitcoin when this level is retested. It is only if we close a monthly candle above that dotted trend line, in this instance right over here, and in this instance right over here, that is when we officially enter the bull run, and we expect the price action to continue aggressively toward the upside for the months to come. However, if we take a look at the prior scenarios, instance 1 would be over here. We failed to close a monthly candle above the dotted trend line. We then followed suit by a healthy 30% correction, only then to continue upwards after. Scenario number 2, we failed to close a monthly candle above the dotted trend line, which resulted in a 44% correction, only then to continue up through the months after. So what I'm trying to show you guys is that corrections, even macro corrections, in a overall uptrend can be sometimes healthy. The really tricky part is, how do you determine whether or not a correction is healthy or whether or not the correction is actually bearish? And that is when you need to look at high time structural levels. Is the correction that is actually occurring destroying structural levels of support? If so, then the probability that the correction is not healthy starts to increase. The more significant support levels that are destroyed, the higher the probability the correction is not a healthy correction and will likely convert into a high time frame downtrend. So before we move on to anything else, if we do take a look at one more indicator, which is going to be the Ichimoku Cloud baseline, we can see that we do still have some time until we officially enter a macro bull market. And what does that really mean? It means corrections, it means pullbacks, it means these flash crashes are going to be a standard and are going to be common in Bitcoin's price action. We cannot expect the price action to move up 8 weeks in a row all green without seeing some sort of flush of liquidations, a flush of open interest, or a correction in the price. If we take a look at this Ichimoku Cloud, we have the baseline, the red line. Every single time we close a monthly candle above the baseline, that is when we enter that bull market phase. As you can see, according to the 4-year cycle, that usually happens around about the exact time the 4-year cycle starts. In this instance, that is aiming for around April 2024. So according to our date range trend, according to our structural levels, we have not quite yet validated the start of the bull run, and we do still have some time before that bull run is technically and structurally going to occur. That does mean we are open to the possibility of corrections and healthy pullbacks. So let's go ahead and discuss what this means on the higher time frame chart. If we zoom out on the 3-day chart over here, we've got all our key structural levels of support and resistance. Of course, we have our major yearly long uptrending diagonal support level represented by this diagonal trend line. But we're not really focusing on the diagonals as of right now. I want you to focus on the horizontal levels. We've got 3 major horizontal levels we are watching. Number 1, the 48k level, and I just drew 8, very strange. The 48k level, which is going to be the dotted trend line as we just discussed. A monthly candle above that level will result in a macro continuation into a bull run. However, we do not expect to see that this month. If we do see that this month, that is going to be something we have not seen the prior 2 times and could result in an early initiation of the bull run. However, based on historical data, we would not expect that to happen until at least April 2024 or after. So we are kind of a little bit ahead of ourselves in terms of the overall price structures, and that is why corrections from these points should be considered healthy. So 48k. The next one is going to be the 40,000 to the $38,000 support. This level now is a level of support. And then finally, we have the 32k level of support. So let's go ahead and discuss. The 32k level is the most significant level on the chart, which will determine whether or not Bitcoin remains in a macro uptrend. If Bitcoin loses 32,000, by the time we reach 32,000, we will likely have broken through this diagonal trend line and resulted and entered a macro downtrend. So the 32k is a horizontal base of support, not only from a structural perspective. If we take a look at the macro chart, the 32k level is represented by the solid trend line. When we break a monthly candle above the solid trend line, we actually never in the history of Bitcoin have seen a retest of that trend line, which resulted in a monthly candle close below it. Even when we saw the COVID-19 crash, we did not close a monthly candle below it. So we remained above 32,000. That doesn't mean we can't retest it, but what it does mean, if we do close a monthly candle underneath it, we would have seen a correction that will result in a macro monthly downtrend. And of course, the probability of the bull run starting then diminishes significantly. So while we remain above 32,000 on a monthly chart, technically the 4-year cycle, technically the bull run is still going to be expected as per we have traditionally seen. So 32k, a monthly candle below, would invalidate the 4-year cycle and would invalidate the next bull run as per the structural patterns we have seen in the past. That will put us in a very tricky position, okay? 40k to 38k is going to be the current high time frame level of support. If we think about 48k to 32k being that zone that we need to clear to enter from a macro uptrend into a macro bull run, the 38 to 48k level is kind of that middle zone between these two key levels of resistance. So it acts as like a midline. While we remain above 40,000 and 38,000, we are actually primed for a continuation to 48k. If we lose 38k, that is when we're looking for a correction back to 32k. So it acts as a high time frame trigger point. Therefore, this correction that we have seen so far did not result in a correction as of right now, which took us underneath 38 to 40k, and therefore, according to what we said at the start of the video, this correction as of right now should be deemed a healthy correction and has not impacted the macro uptrend or the macro integrity of the current cycle, 4-year cycle, or of course, like we said again, the overall uptrend that we are in. And that is a very important point and a very important thing we do have to note, as it focuses on, again, zooming out when in doubt. It focuses on being objective and looking at the charts for what they are, not looking at the charts based on what just occurred from an emotional perspective. So as of right now, while this support remains support, we are still primed for a continuation upwards. The question is, will that happen initially, or will we see a little bit of a drawdown, a little bit of consolidation before we actually do see that? So let's go ahead and jump into the short-term charts. So as we said at the start of the video, we saw a pretty brutal correction. The 10-day long support level was lost. We were prepared for this. We talked about this, and we saw that correction develop. If we go ahead now and discuss the current zones, this is where it gets pretty interesting, right? If we take a look, we have a few key points on the chart. We're going to go ahead and delete the irrelevant stuff for now. So let's go ahead and just bring up the most important things. We've got our major uptrend. This is the one I'm shaking around. The major uptrend represented by this diagonal green line. This trend line converges within and through the 38k to $40,000 high time frame support. Remember, the 38k to $40,000 high time frame support represented by this red box is going to be this level on the high time frame chart, a level of absolute significance. So we do have not only, again, a horizontal structural support, but we have a diagonal trigger. The diagonal trigger is going to act as a flipping point from the trend turning from an uptrend into a downtrend, meaning this trend line is the most significant level we are currently watching, as is moving through the 40k level. Thus, okay, if we do come into the 40k level, we would expect a retest of this trend line. Only if this trend line is lost will the correction result in a high time frame downward trajectory, breaking through that 38k level, potentially moving downwards towards 32k. Specifically, we would not immediately see 32k. We might never see 32k. Let's discuss what would happen from a hypothetical perspective. If we lose this uptrending support line, say for example Bitcoin doesn't bounce over here, we'll discuss the probability for a bounce in a second, say it does not bounce over here. Say we continue downwards, say we lose $40,000, say we retest this trend line, but we do not hold it. say we break through, and again, that is a lot to occur, a lot has to happen for that to actually develop, and we'll discuss that in a second, but let's say hypothetically that does happen. The first initial target is going to be this fake out low. We are looking for the gap in the VRPV at 36k. If we fail to bounce from this level and correct further, we would then be looking for a correction down to the bearish trigger at 33,350. Only if 33,350 is lost, we would then look for a correction to 30,000 and potentially sub 32,000 to 30,600. If we had to retest this level, depending on the time of which it takes us to get that low, will determine whether or not the monthly uptrend is lost. So if all of that happens for the next hour, hypothetically never going to happen, let's just say it does, obviously the trend line is lower than that 30,600 point, the macro uptrend is still intact. But say that happens in May next year, the uptrend is sitting at 33k, well that would result in a breakdown of the uptrend and the macro uptrend will have been lost. So time is also relevant when it does come to these things. Let's go back to the chart. Now, again, guys, the probability of that happening is super low. I do not believe that is happening. In fact, you should be thinking the trend is your friend until it's not, and the uptrend is still intact, and we do have high time frame support over here, and therefore, as we approach support, the probabilities of a bounce upward begin to increase in comparison to a continuation downward. So, we've discussed the bearish scenario. If we lose 40,000, that would be our bearish trigger. We would expect a correction to fill the range down to 38k, or whatever comes first, the uptrending diagonal support level. If we retest this level, that is going to be the opportunity to take new longs. Long the hell out of that support line and hope it holds, because that could be the trigger for a continuation upwards. If we fail to hold that level and we lose that 38k level, I'd be looking for corrections, and that would be incredibly bearish on the macro charts. Let's go ahead and talk about the immediate price action. So guys, as you know, I've said it 10 times this video, I'll say it again. Support is support until it is not, and we are retesting that 40k level. Now, by all means, the chart does not look amazing, right? We are seeing some obvious bearish signs, we are seeing a huge correction, but you have to really take your emotions out of it and zoom out. When in doubt, zoom out. The trend is up, we have high time frame support. The correction didn't break us through the 40k level. This, in my eyes, right now would be considered a healthy correction, and therefore I'm looking to take longs at any opportunity I'm given on coins that are at high time frame level of support. If we take a look at Bitcoin from a technical perspective, let's go ahead and draw that RSI trend line down. This is going to be a very key trigger point I am watching for Bitcoin. This particular RSI trend line, if we are able to break through this trend line, that would indicate the cluster of price action we have from this local high to here is going to flip bullish in terms of momentum. If we do get a bullish momentum flip, of course, this will be very, I'll tell you why it'd be good in a second, particularly after a bullish divergence, right? We had falling price action. We had, of course, rising RSI, bullish divergence. If we have an overall momentum flip, that will give us the strength we need to break back above that 42k level and result in a continuation to retest that dotted trend line. The dotted trend line is 4,300 sitting at that local low, and that is acting as a bullish trigger point. So let's zoom back out to the higher time frame. Actually, let's go to a hourly chart. Here it is. The 43,100 level, this is going to be acting as a bullish trigger point. Bullish trigger point. If we break above that level, if we break above 38k, 43,000, that will in turn result in a breakout of this diagonal trend line and will result in a continuation upward again. The overall uptrend will be resuming, the price action will be continuing to 46 to 48,000. So, if I had to summarize today's video, the correction that we have seen, yes, it was absolutely brutal. The most brutal correction we've seen in terms of liquidations for a very long time. Yes, it was scary to see because of how quick and how brutal it all played out. No, the short-term price action is not looking terrible here. While it remains above 40,000, it is above support. No, the macro charts have not been drastically impacted. The trend is still up. And you have to be aware this correction, as of right now, as of the data we have, as of where the price is, should be considered healthy. It is only when, I'll say it again, it is only when the overall uptrending diagonal support that we have been trending above for the last 2 months, reflected by this diagonal trend line, when that is lost, that is when you should be worried. When 38k is lost, that is when you should be worried. Until then, I see is nothing but a nice strong liquidity flush, a retest of a high time frame support in a uptrend before a continuation higher. Thanks for watching, guys. I hope you have a fantastic day. We'll keep our eyes on the price action again. A lot can change. We're not saying anything is certain. Particularly moving into economic news, high impact economic news. If interest rates change, well, we already know the market's going to react crazy. So be prepared for that, but also understand you have to trade based on probabilities. Everything in trading is probabilities. And while we remain above a massively strong high time frame support, while the uptrend is intact, while all of the data from prior cycles are suggesting the market is strong, the probabilities that this correction was healthy far exceeds the probability that this correction is going to result in a macro downtrend, which is going to take us to 32,000. Okay, thanks for watching. Catch you guys on the next one.